Okay, welcome everyone. I'm going to do a closing market analysis. We're having a lot of price action going on, and I think it's important to give you guys a little bit more frequent updates while the market's moving around quite a bit. So if you guys are new, this channel is all about technical analysis, stock trade ideas. I try to point out those ideas and give you the technical setup before they play out. So I'm not going to just come out and say, hey guys, buy the dip. Markets are going higher because of this and that and Russia and none of that. Everything is based off the technicals first. And yes, I do throw in some fundamental analysis here and there, but for the most part, always the technicals first. We use entry points and technical indicators to give us an idea of where a trade is likely going to play out. So if you're interested in learning about this, learning about trend line analysis, candlestick analysis, divergence analysis, risk reward analysis, take my stock market technical analysis course. I put the link in the description below. I put that course together a couple years ago at the request of my subscribers. I priced it affordable. I don't want to give my time away for free, but at the same time, it's affordable, it's accessible for all, and it has a lot of good information that really should help you really jump ahead in your learning. Okay, because that's the most important, is learning the skill set for yourself. I can point out the trade ideas that I see. But if you have the skill set to trade the markets yourself and use the technicals for your own trades, you'll be able to find a lot more trades and take advantage of the opportunity when it shows up. So check that out. I think there's a good value there. All right, let's get into it, and we'll start off with triple Qs. We are going to start off with kind of how we ended the day. So let's go to the weekly chart. I think it's important to understand where we're at. So look, here's your bull market in the tech sector, going back from 2009. This is what I have kind of marked out right now. I think before we could play with this lower line a little bit. I think it's about right here, to be honest. But again, it's so close you can move it a little bit. So let's just say we're kind of right there at that point. So we've got several reactions tagging that weekly line. We have a break of trend where the Fed stepped in. Again, I think this was a break of trend because the Fed stepped in right here. All right, then we were walking up this trend line. We broke trend again right there. The Fed stepped in again. So both times that we broke the bull trend, the Fed stepped in. So as I zoom in, here we are. We're breaking the trend again. All right. Does the Fed step in this time? We'll see. I don't know if they have the ability to do that, so we'll see. But that's what we got on the weekly chart. So potentially a break of this bull market trend in tech. Going to the daily chart, the level that I was really looking at, sorry, I need to go to the hourly to really point it out. This was the key level right here, 298. All right, we've been holding that for a little while, just the last few days. And basically, that was a key level of support on the daily. So let's roll out to the daily. And there it is right here. You can see it's former resistance back here. And then it was support. So lots of reactions on that level. We are breaking that level. We did have a reaction, obviously right here for the last 2 days. We've held. But today we broke the level and continued to sell off. So here's the thing. I did reinitiate my short. Yesterday, I told everyone I closed my short, and I did close my short as we were holding that level of 298. Today, since we broke that level of 298 and impulsively sold off, I reshorted it on the break, and I remained short going into the close. Now, I know that's kind of wishy-washy because yesterday I said I covered, and today I went short. Again, when you're at a key level, my trading style is all around taking positions and pivoting around key levels. And 298 was a very key level. It's a level of support. And, as long as we hold that, I would look for that to be support and for a bounce to take place off of that. However, if we don't hold it and we break down, I need to reinitiate the short because once a level breaks, you short on breaks of support. That's, you short either in back test into resistance or breaks of support. Today we got the break of support. I had to reshort it. So went home short. Was a profitable day, obviously, as I, took that position. And here's the other thing. One of the main reasons why I went home that I felt more comfortable going home short, Apple. All right. I've been talking about this for for quite a while, but I've been talking about a lot in the last couple of weeks, how Apple is a chart that I'm really focused on, and I'm looking for a break of this trend line on the daily chart. All right, I've got it circled, all the tags of support, I've got the trend line marked out, and the last couple of days, we broke on May 9th, but it wasn't quite obvious enough. May 10th, they recovered it, and it was just too close to the trend line there for me to feel comfortable to say that it was a sell signal. Today, I can comfortably say we have a sell signal in Apple. So big old breakdown, big impulsive selling. That's what you want to see. Impulsive selling. Volume was increasing here. There's your volume on today. And basically, we just have a sell signal. So we should see lower prices in Apple now that we've broken the bullish trend. This was support here as well, a little bit right there. You can see we basically hit resistance. There's some resistance there. It was support, and then boom, it gave way. So we should have quite a ways to go down in Apple. If you look at the weekly chart, Apple's bull market is all the way down here. This is 2010. This is your bull market in Apple, and basically the Fed, when they did all the stimulus, caused this price action, this big bearish rising wedge pattern way up here, which was building huge negative divergence on the momentum indicators. Look at that divergence that was building on the weekly chart. Okay, so all of the 2021 and parts of 2022 in Apple have been divergent highs. Apple's been continuing to build higher while momentum is dropping off. So now we finally see the break of trend, and the momentum should carry us lower as we start a downtrend. So don't look, at this point now in Apple, we look to sell the rips, all right? Apple's changed from, if you were buying the dips at support or buying the tags of support, it would make sense that now you want to sell the rips. So any kind of rallies should be sold into. All right, we might rally up to here, 151. That was some former support, and now it's resistance, so maybe we get that. But at the end of the day, look for Apple, look to sell the rips. So when you see rallies in Apple, you're going to want to sell into those. I think there's some more downside here in the near term in Apple. We just got the sell signal. We might pause for a day or two or the rest of the week. But at the end of the day, I don't see, we've started a downtrend at the end of the day. So that should continue to carry Qs down lower. And going back to Qs, that's putting my target, my pre-COVID highs right here, 238.30 that I talked about in the last couple of days. That's putting that target in play now. So I've moved my price target from 298. We move it down. Next price target is right there, 238, 240, right in there. So we'll continue to talk about that, but I think we're going to see lower prices in tech as we run into that level. Now down there, you're probably going to hear the Fed step in, all right? You're probably going to hear the Fed start to back off and talk about they're going to do something to start to try to help the market down here. The other thing to look at was TLT. So I took a position in this one today, but if you look at the hourly chart, TLT, this is your long bond. So whenever markets sell off, oftentimes money flows into bonds as a safety, and we're seeing that reaction today. This was up 1.5%, and it was, it had this bullish falling wedge pattern, bullish divergence right there, and not so much on the PPO, but definitely on the RSI, and boom, breakout. All right, so we should go higher in TLT. I'm looking probably at least for this level, 124.34 as a minimum target. And that would be kind of a long-term trend line. If I roll out and you look at the weekly chart here on TLT, that's kind of your long-term trend in the bonds. We've broken that trend. So I think we are in a rising rate environment, but we're probably going to come in and back test. Okay. And so that's what I see. And then maybe down from there. So I'm long these bonds for a trade, not anything long for, not for a long period of time. It's not an investment. Okay, Tesla. This is the weekly. Let's go to the daily. So Tesla, big down day today, and I've been talking about this. I figured that support was going to break 782. It's now broken, so you have another sell signal. Each time we take out a support level, it's a new sell signal that tells you, okay, likely we're going down to the next support level. Okay, so now, you've got minor support right here, 702, but I only have one reaction really right there. I don't think it's much of support, but we can just keep it on there. You can see we definitely did have some reactions back here in the past as resistance. So that's the next level, I guess. 699, we'll call it, 700. That's your next level of support. Once that goes, I really don't see anything in our way until we get down to this 550 area. 550-ish should be some support, and this has the potential to go a lot lower. Again, you look at a lot of these meme stocks, these mania stocks that were all pumped up, and Tesla's one of them. It's a viable company, but it was definitely pumped up. They've all given back a lot of their gains. So Tesla has the potential. Here's your pre-COVID highs right here, 186. We could get down there in Tesla. That would be a potential target to watch. So just pointing out the near-term levels, I think we're heading much lower. Look at the RSI here, okay? When you look at the RSI, recently we're starting to take out these divergences there. Just starting to take those out. The PPO has been taken out. We don't have bullish divergence on the PPO anymore, and the RSI pretty much just about took it out as well. So kind of hanging on to it a little bit with the RSI, but it's gone in the PPO. So we're starting to see bullish setups get negated, and that's very bearish. That just tells me we've got a lot lower to go. Another big winner today, down 13%, was GameStop. Again, you just look at GameStop and exactly like I was expecting. All right, we've talked about this trade. The entry, you really could have shorted it at about 131, or we popped above the 200. Once we broke back below the 200, I shorted it right there. That's my short where I circled it. A break back below the 200. And that's about the time that the market was breaking as well. Looked like it was a good short. So from there all the way down to where we're at now, that's a move of about 46%. But the selling is just getting more and more impulsive. So basically the rats are fleeing the ship is basically what's happening. This should continue. Maybe minor support right here. It shouldn't hold, I suspect. Maybe you have a day, maybe you consolidate for a day or two. But at the end of the day, we shouldn't really be going much higher in this. I don't see any real, rip your face off rallies until we get down to about 39, 40 bucks. I think we just head straight down. All right. Again, just like when you were moving higher, you had these huge ripping days where everyone was piling in. Well, that momentum now shifts to the downside, and fear is a more powerful emotion than greed. So you should see quicker selling. You should see big green candles like this to the downside. And we might get that tomorrow. You might just gap down huge. We could just gap down maybe to 39. So earnings are coming out here in June. Maybe it wants to hold, but I suspect we probably just impulsively move down. Earnings comes out, maybe it's rallies on earnings, and then we continue down. So lower prices in the future, most likely. And look at the RSI right here. All right, you can see, boom, just took out the bullish divergence. You had bullish divergence, it's gone. All right, now look at the RSI, the PPO. Still have it there in the PPO, but it is gone in the RSI. So we're seeing the momentum that had bullish setups start to fail. All right, so just tells me that this thing's going to continue to collapse. C's, okay, more downside, down 5% today. Again, they rallied it right up to resistance. I pointed that out in the morning video and got rejected, and down she goes. So lower prices, earnings is out of the way on this. There's really nothing holding this up until we get, we got some support down here about 46. It's not the cleanest level. I do want to point that out. I've got a reaction here, a little bit right there, some right in there. It's about the best level I can make. So 46.50. So we get close to there. We'll probably find a bounce somewhere in there, but it should be a pretty quick move down. And I don't see any reason why we will not continue down. Yeah, it looks good. PANW, more selling today. We've got earnings coming up on this one. So there's obviously risk, when you have earnings coming up. We're at support, right? 457 is about support. We might hold. I don't think so. I think we probably sell down, probably run down to fill this gap right here. Maybe we hit this gap. We might even fall down and fill the gap before earnings, but I think we probably at least get to the gap entry by earnings, and then we'll see. We could bounce off of that, and the end of the day, sell the rip. All right, sell the rally. Any kind of rallies you get, you look to sell or short into resistance, in my opinion. Another one, CLX. I talked about this one, Clorox. Now, this one's not going to be a huge mover because it is a defensive play. So you understand that, this is where everyone's been hiding out. They've been hiding in oil stocks, they've been hiding in healthcare stocks, and they've been hiding in defensive stocks. All right, this is kind of a defensive play. But at the end of the day, the technicals speak for themselves. Here's your weekly chart on CLX, big bullish trend going back to 2011. That's your bull market. We broke trend, big sell signal on the weekly. It doesn't get any bigger and prettier than that when it comes to a weekly sell signal. And we ran up and back tested the 200-day. I've got that circled. We should reject here. Typically, you reject about the 200-day. So we should get rejected here on this, this chart and make another leg lower. All right, so I see us moving down to 112.40, and I don't see any indication today that that's changed. We're just kind of, still kind of getting rejected up here, but it's starting to roll over, so keep an eye on that. Now, on this one, there is the potential to rally up and do a full backtest right here. Again, I would probably just be looking to add to my short trade if we backtest the trend line because I would expect it to fail. All right, so you got to give it a little room. From where we're at now, we could rally maybe 7% up to that trend line and then reject. But we don't have to. They might step in early, and oftentimes the 200-day acts as resistance. TSM, Taiwan Semiconductor. Haven't covered this one in a while, but again, we got the sell signal initially on the break of this support line right here, 108. All right, see, I have all those things tagged. We had big negative divergence. I pointed that out. All right, so basically this divergence has been building since here, and it's just this big negative divergence on both momentum indicators. You can see it right there. And so there's your last divergent high, and there's your break of trend line support. All right, once we broke, it's all down, it's just all downhill. All right, so it's sell the rip. When you rip, you short into it. All right, so if we get a rally, all right, you want to look to short into it. Probably somewhere right around here is where I would expect the rally to fizzle out, about 99. Okay, I don't think it could go much higher than that at this point. But you see a rally into 99, that that's your objective area to short at right there. And otherwise, we should continue down, and I think we do continue down. Probably continue down to 76.40, and then we've got a big level, a nice level of support right here at 60.52. That's your pre-COVID level right there. So that's kind of my final target on this, 60, 50, 61, somewhere right in there. This one still has bullish divergence, so I definitely want to point that out. You've got it right there. So we have the potential to hold the bullish divergence and get a bear market rally, okay? There is the potential to rally up to this 99 before selling down. So you just have to kind of keep an eye on it. One way I like to do it is go down to the hourly chart, and I just mark out what the downtrend line is on the hourly. And if I can grab it here, I can show you. And I'll just mark that out. It'll look something like... something like this. It's not that clean, but we got to maybe go something like that and try to find it. Yeah, it's, sometimes you can't make a very clean trend line, but it's somewhere right in there. You start taking that out and you could see that rally, but otherwise we'll just let this continue to trade down. Okay, cars. So this is Avis Budget Rent-A-Car. This one hasn't quite broken down yet. They're still kind of holding on to this. I think we get the break. Now that Apple's broken, and that's kind of the last, that was just the last holdout when it came to the FANG stocks. all the other fangs have really broken down, and Apple was just kind of hanging in there. It's now broken. So now that you just don't have any market leaders, where's the strength going to come from that's going to hold the market up? You're going to have to see broad-based market participation. If the fangs are selling off, you're going to have to see broad-based buying across the board in every other sector just to keep the market up, and I just don't see it happening. So this should come down. 200-day moving average right here. Again, if you look at the hourly, they kind of tried to hold it. Let me see where we closed at. Yeah, they're still kind of trying to hold it in this area right there. But if you look at the daily, the last couple days, I need to move this down basically to right about there. We need to kind of take out the lows. We need to take out the price action from where we closed in order to see lower prices. Likely going to come in the form of a gap down, just because this one's been drifting, and I think you gap down probably right to the 200-day moving average, and then you could get a bounce on that gap down. So keep an eye on that. But I think we're going to see some lower prices here pretty soon. So maybe a gap down and bounce and then close the gap and then roll. Maybe a gap down and just completely roll over. I don't exactly know. So we'll just have to see how that goes. But this one's got a really big target way down here at 51.34. All right. That would be my final target. It's going to take a while to get down there. Months most likely. But I do think we probably continue to work our way down there. Okay, gold. So gold did hold its support line. This is the bull market support line right there, marked in red, and we held it right there last couple of days. We're still holding. So, I think we're gonna get a rally in gold. Looking at my trend line, I think I've got it about right. So, and I've got all these little things marked where we've hit support. So we should hold in this area. Now, there could be some stop rates. All right, we might have a brief little dip below and run down and then recover. There is the potential. Whenever you get in a key area, there's going to be some games. The market makers like to run stops, all right? And everybody's got their stops in gold placed just below, all right? So there is the potential to sell down, run some stops, and then look for the reversal, all right? I would expect to get that reversal. If you don't get it, then maybe we are really going to break the bull trend. But right now, I just don't see it happening. More than likely, I think if the market continues down, you should see a flight to safety. We're already seeing that in bonds today. We should start to see that in gold. Okay, gold traditionally can be a flight to safety trade, and I think you're going to see that. So keep an eye out for that. That should, the miners should really rally on that, and we'll keep watching for that one. Okay, let's take a look at ARK. All right, so ARK is not a buy yet, but I do want to point out a level that it might be interesting to buy, all right? Looking at the daily chart here, you've got this downtrend line right here, and you can see support, support, support. Very obvious level. So we are getting close. We are approaching that level. We still have a little ways to go, but this thing moves fast. So I want to start pointing it out now because as you can see, ARK is basically plunging. It's just gone collapsing, parabolic to the downside. So we might just run down and hit that level. I'd probably be interested in looking at maybe a potential bounce trade or a buy down here at this 28.75, depending on when we get there, but it's somewhere right down in here. Again, we'll want to see some divergences show up, and the momentum is straight down, so we could slice through it and then maybe recover. The point is, this is likely going to be some support down here to look at. You'll notice we don't have any bullish divergence on the PPO. That's kind of been taken out. We do have slight bullish divergence on the RSI still. So we'll see how that plays out, and if it continues lower, does it hold the divergences or does it give those up? Either way, probably going to be due for a bear market rally down here. And so, yeah, we're going to keep an eye on it. This thing's been pretty much murdered out. So from the highs down to where it's at, down 77%, it's probably going to be 80% or so by the time it's all done. But this is basically an ultimate collapse. Very, very similar to the 2000.com bust, where the tech stocks, a lot of the tech stocks, including Amazon, they all fell about 80%. And so, yeah, this is likely what's going on. We might see these things bottom out down here. They could go lower. So again, I'm just kind of pointing out a key level that I'd be interested in looking at a potential long. Moving on. To round it out, we'll just look at the Gdx Gold Miners. I know we talked about gold, but I think we're at decent support. All right, now we might have to kind of knock out a bottom and kind of just gyrate a little bit. But this level right here, 31, oh, it's about 31.40. That's a level I've had on my chart for a long time, and that's really good support. And it was major resistance. So if you look at the weekly chart on Gdx and I roll out, you can see that this level right here, all right, resistance, resistance, resistance. All right, it was resistance there, and then once we broke above, it's been support ever since. Support, support, support. A couple little brief whips below, and here we are again right there. All right, so that's the level I would expect it to hold. I do think the miners are probably near the end of their selling, and they're probably going to rally. Again, sometimes you'll see that initial move down in the miners, and then they start to rally as gold catches that flight to safety. So, you know, I'm not loading up on the miners yet. I bought a couple, and I'll keep you guys posted. I'm just looking for a few more things there. I don't quite see it yet, but keep an eye on gold. All right, that is definitely a focus area for me because those miners could be a great buy here, and the potential for a strong rally if we see that flight to safety bid. Okay, guys, I'll wrap up. Drop me a thumbs up on your way out. I'll catch you guys tomorrow.